Now, all eyes will be on Finance Minister Enoch Godongwana when he delivers his budget speech after this afternoon. He faces a tough juggling act as SARS warns tax collection will be lower this year. It blames it on a shrinking tax base and rolling blackouts. To discuss this further now, we're joined by acting Deliotte Africa Chief Economist Hanna Marias. Ms. Marias, good morning and thank you very much for your time. A very big day for the country and most certainly the Finance Minister. What are the key priority areas you expect the Minister to deal with extensively?
Thanks so much for having me this morning. I think obviously some of the key priority areas coming out of what the President announced from a SONA perspective will focus and circle around, addressing the elephant that's been in the room for a long time. And that will relate, to load shedding. It will relate to getting our economy onto a path that will result in economic growth ultimately. And the biggest constraint to that structurally currently is the power crisis. So certainly dealing with that. Be it from, what that means for consumers, what that means for businesses, based on the incentive regarding renewables, for example, is one element around that. It's certainly also the key announcement that is expected, is around the Eskom debt take on. So those are perhaps some of the key issues that directly relate to unlocking growth in our economy as well, which, we have had lackluster pedestrian growth, to name it politely, for almost a decade.
On that taking on of Eskom's debt, what are your predictions there? Will it be a third, 2/3, as some have predicted? And over what period of time do you think we will be paying it? Will it be 4, as some have said, perhaps 50 billion per annum? How do you expect it to work out?
Yeah, and look, perhaps that's not my key area of expertise per se, but I think there have been, conversations obviously around a staggered approach versus taking on that debt immediately. A staggered approach perhaps being, better from a conditionality perspective, but perhaps not, bringing the change that we need immediately about. In terms of the size of the debt, the conversation has been, as per the MTBPS, between 1/3 to 2/3 of that 400 billion of Eskom's debt. But I think some analysts obviously have indicated that less than 50% of that debt, or taking on less than 50% of that debt, wouldn't actually make any dent in terms of Eskom's sustainability path going forward. So the expectation is, to potentially take on more than 50% of that debt.
Now, many are also watching on with keen interest around how the Finance Minister will handle the public sector wage bill, which is a big talking point in the country. And it's at a time when some economists are advising that the Minister rein in the spending on that front. What are your expectations there?
All right. Yeah, look, I think there's so many downside risks on the expenditure side. And obviously juxtaposing that with what we can expect on potentially the revenue side. And the public sector wage bill certainly is one of them. I think it will be interesting to see to what extent the Minister can toe the line on that. But, that and other potential unfunded expenditures would be a key risk to the fiscal consolidation path and the sort of path of fiscal discipline that we've been seeing, the Minister put the country on over the last year or two.
But one assumes it might be a tough balancing act here when you look at the public sector wage bill, that if you don't accede to their demands, you've got a public sector that could take to the streets, creating instability and also costing the economy. So one wonders, as an economist, what would be your advice in this instance? What does one do? Because the money is not fully there. There are those that are, say, rein in, but there's also a greater expense if we are to halt production and we've got workers on the streets.
Absolutely. And those risks, to economic activity, we were really seeing, South African Reserve Bank predicting flat growth for this year at 0.3%. It is a fine balancing act to meet, with public wage sector unions here halfway in a way, because that creates the risk of a recessionary environment in South Africa even more so. The unrest, and particularly in the run up to an election year, those are certainly risks that are on the rise in the coming 12 months.
And then on revenue predictions there, what are you predicting? Are you expecting perhaps that the finance minister will give us some sort of significant revision downwards?
In terms of revenue, I think if you look at some of um, the polls that have been conducted, I think we are seeing, for example, in the Bloomberg poll, more than half of economists that have been surveyed do expect that we actually still will see a budget surplus, a primary budget surplus, that is. So that excludes interest payments, not in this coming fiscal year, but in the one thereafter, that's 24-25. And there is the expectation that we are able to balance, a budget deficit, which is a revenue overshoot, right? That's an expenditure overshoot of 5% or less. But I think if we look at, what leeway there is and what wiggle room we actually have on the tax front, it won't be personal income tax. And I don't think anybody is expecting a rate hike there. On VAT, I don't think it's the right timing to do any VAT increase.
Highly political,
VAT hike.
that one.
There might be. Right. There might be some zero rating of essential foodstuffs. So just look at food inflation, which obviously affects the poor the worst. 14-year high that came through in January, double-digit increases from an inflation perspective and foodstuffs. On the corporate income tax side, CIT is about a fifth or so of tax revenues. I think we might see a hold on the reduction or that sort of path of lowering corporate income tax, even though in theory, lowering corporate income tax could attract investment, create jobs, etc. But if you just look at the broader environment that isn't enabling, again the power crisis, etc., that certainly is against us. So that leaves us with things like sin taxes, for example, that's expected to increase. But I think we've also seen parts of the industry think, the beer industry, come out and say, obviously they haven't really recovered yet post the impact that the lockdowns had on the industry. The sugar industry has raised, things like the health promotion levy and any further increases to that as a key risk to, destroying livelihoods and ultimately jobs. And then there's the fuel levy. We've seen,
Yes.
suspension in the fuel levy in the past. It's certainly, transport costs are some of the, biggest shares of the consumption basket, again, of some of the poorest, households. So that's certainly something to look at. Will it be raised or will we see some sort of, reprieve there? But I think the most important part, and we've seen that, in the mini budget in October as well, is the focus on revenue collection and, capacitating SARS in that regard as well to up the administrative competence, to focus on tax compliance and thus add to the revenue collection ability. These are all short-term measures. The medium-term measure is, let's get the structural reforms right in this country. Sometimes politically difficult to do, as we've seen for the last few years, but we need to grow the economy, and growing the economy will result, in more employment. It will result in more profitability. It will result in, higher tax revenues as well. And that means, to my first point, addressing the energy crisis, other structural constraints, the state of our port, our rail infrastructure, etc. Yes. We need to build confidence that comes through policy certainty. We need to address issues in the labor market, skills, our education sector, etc. We need to reduce red tape for small businesses, etc., etc. Nothing new. We know all of these things. It's about, tackling them, unfortunately, in a time of crisis.